senior markets correspondent Kevin Green is with me. And so you're taking a look at the action here this morning. Some of your thoughts?
Yeah, so far, I mean, obviously we saw a really nice push overnight, especially with the fragmented session that we saw for futures. The news headlines obviously hitting the tape, getting maybe some of this reversal of these the downtrend that we saw on Friday kind of out of the way here. And we are seeing strength pretty much across the board. Every single sector is in the green here, leading the market is information technology, consumer discretionary here. When you're also looking at the amount of stocks that are in the green right now, Nicole, you're looking at around 90%, close to around 90% of stocks in the S&P 500 actually in the green here. So far, so good. That's a very strong start. So let's see if it's going to be able to hold. That's one of the big worries that you have is when you start off up of 1%, 1.2%, that you get some sellers going into the open here. And it seems like that's exactly what's kind of happening right now, seeing a little bit of a pullback for the S&P 500 so far. But if you're looking at the daily chart, the technical bounce that we had actually was at a very crucial area here. We had a lot of confluence when it came to the 20-period moving average, the 200-day moving average, which we touched on Friday, as well as a downtrend line that was an area of resistance that now has turned into an area of support. So you're seeing us actually bouncing off of that pretty aggressively here, pretty decent gap that we have to the open here. You're still looking to the upside around 6,000 here for the S&P 500. Did move up that negative gamma area, just meaning that those puts have been moved up as far as those hedges. And so that's going to be at 57.50. You want to be able to hold that level for this week as well. And once again, some positive price action. If the news is going to confirm, that's really what's going to provide and drive the S&P 500 higher here. It seems like the uncertainty when it comes around tariff policy is still a headwind. And you can actually see that within the volatility space. Today, you actually see volatility up and equities up. If you're looking at the E-mini S&P 500 compared to the VIX, VIX is actually slightly up for today's session. That's something that usually does not occur. 80% of the time they actually are inverse, but 20% of the time they actually move in unison here. And usually that does indicate that something has to break. Either volatility has to slide to the downside here, or maybe we have a little bit so much pent up demand in equities that we see it actually pulling back. So this is going to be a ratio that I'm keeping my eye out on for today's session to see if that's going to stick. Because once again, if you have 2 or 3 sessions that you have this type of price action as well as this correlation, Nicole, one thing or the other actually does have to break here. So let's see how that's going to actually pan out, not only for today, but over the next couple of trading sessions.
Right, understood. I mean, as we're seeing this at the same time and you're watching these key levels, every single sector is in the green today. You've got consumer discretionary, tech, communication services, industrials. I do want to talk about volatility. Anything more you want to add on the big picture here?
Yeah, I would just say on the intraday basis here, a couple of areas that I'm focusing on. 5860 is going to be a key area of support for the market, and we're pretty much testing that right now for the S&P 500. You want to see a bounce here and continuing to move higher, potentially touching the 200-day moving or 200-period moving average on the 15-minute chart, which is sitting at around 58.97, very close to 5900, which is the upper end here. If we actually do get a break above that 5900, there is some flows going into the 5940 calls for today as well. Any further breakdown to the downside, 5820 is going to be kind of that line in the sand, and you'd like to see some buyers stepping in. We break below that, that's where we have a pretty decent reversal of trend, and that's where we'll start probably testing that 200-day moving average on the daily chart. Once again here, maybe some buyers will step in.
All right, and then we look at the volatility levels here. I know we came down to 20 on the VIX. It's still an elevated level, but we're off the earlier highs that we saw last week. Some of your thoughts?
Yeah, volatility is elevated here. Once again, we have kind of this market up, S&P 500 up, volatility up right now. That's something that's out of the ordinary. There's 2 ways that actually can occur. You either have some put buyers kind of stepping in a little bit aggressively, especially when you're looking at the out of the money puts, or you have excessive call buying activity taking place. We don't know what that's going to be, if that's going to be the case here today, but it is an odd correlation that we are seeing the 2 right now. And once again, you're kind of seeing the S&P 500 pull back here as we open up the market. And volatility moving higher. But even if you still sit at around a 20 to 25 VIX, Nicole, I think that actually gives intraday traders as well as swing traders a really good opportunity in order to profit from this market. Not only if you are a long buyer of premium or if you are a seller of premium, it's kind of that sweet spot for traders. You don't want to really dip too low when it comes to volatility index or implied volatility in S&P 500. Once you start talking about the 16 or 15 level, it gets fairly difficult to try to sell premium premium or scalp premium here. So elevated vol for right now. Once again, aggressive price action for the S&P 500. We have a shortened week. We have a lot of economic data within this week, a lot of Fed speakers as well. And so when we have these shortened weeks, volatility also kind of coincides with that.
Right. How about we look at some stocks? Pinduoduo, PDD is really what it's called now, right? Down 17.5%, a double miss.
Yeah, we are seeing it down on the session here. Today, you did see revenue actually miss, coming in at $13.18 billion, the U.S. equivalent here, missing the street's expectations of $14.17 billion. And the adjusted earnings per share also missed significantly, coming in at $1.56. Street was looking for $2.49. Now, the leadership team does state that for the quarter, they had substantial investments to support their platform. So they spent a lot of money in order to provide an expanded ecosystem and provide some support for those that are transacting business on their site here. And that obviously ate into margins. They did see maybe some slowing when it came to demand, but they're really trying to focus on the fact that the investments that they're putting in now are going to pay off in the long term. Unfortunately, it seems like the market, when you're looking at investors, really aren't buying that explanation right now as the shares are down, but it is trying to recover or maybe consolidate at these lows. But definitely missing the street's expectations is not a good recipe for equity action, especially in this type of environment.
And then we turn our attention, thank you for that, Kevin. We look at AutoZone. I mean, Advanced Auto Parts wasn't that long ago. We heard good news there. The AutoZone CEO seems to be excited about some of the momentum into the summer. What stood out to you in the report?
Yeah, so AutoZone is a little bit different from Advanced. So Advanced Auto Parts also had significant amount of short interest there and very low bar going into their earnings. AutoZone, a little bit different. It's a stock that's trading over $3,000 a share, so not a lot of short interest when it comes to this name. When you're looking at EPS, it actually did miss the street's expectations, coming in at $35.36. The street was looking for around $37.01, and revenue did beat the street's expectations, coming in at $4.5 billion. The street was looking for $4.42 billion. When you're looking at same-store sales, it's on the right trajectory to the upside. For the total company, you saw a 5.4% increase on a year-over-year basis. In their international business, when you're looking at same-store sales, also coming in at 8.1% year-over-year as far as growth. And that's amidst some of the headwinds that they're seeing for currency. But they do see growth when it comes to domestic DIY projects as well as commercial segments here, and they believe that they are going to see a very strong summer, even though we did see gross margins being pressured in the near term. But they do believe that that's going to turn around here as maybe passing on some of those tariffs to consumers will actually stabilize those margins or even expand those margins out. And that's what they're also a little bit optimistic about. So kind of a mixed report here, but I would say the commentary from their executives is a little bit more optimistic than probably what the numbers show for this quarter.
Yeah, and then we're back to the airlines. Do my bags fly free or they don't fly free? It was a whole thing. It was the battle of the free bags with all these different airlines. Where do we stand now?
Yeah, it's kind of breaking my heart. Southwest is my favorite airline, or was, but you are actually seeing an upgrade from Jefferies, up from to a hold from an underperform here with a new price target of $33. That's up from $24 here. And this is after meeting with the CEO as well as the CFO during their Dallas bus tour here. Now, they do believe that they're going to obviously meet and exceed the street's expectations when it comes to the $1.8 billion EBIT improvement initiative set for fiscal year 2025 here. And they do believe that there is going to be a lot of changes when it comes to yield and inventory management, expanding the distribution channels in key areas and key segments here, but also cutting back on underperforming cities. We are seeing that out here in Colorado, especially in the Colorado Springs location. It sounds like they're going to actually be removing that hub here. And they do believe that there's going to be new strategic connection routes. And so they're a little bit optimistic. Maybe the stock was a little bit oversold over the last couple of weeks because of the concerns on the macro level, as well as some of the internal pressures that we've seen for Southwest. But Jefferies, once again, getting a little bit more optimistic on the name, moving this up to a hold from an underperform.
So much of this depends on the strength of the consumer. Airlines, cruise lines. I mean, the big picture here, we just finished talking about housing stalling with high mortgage rates, et cetera. How do we feel big picture, or what are we hearing It wasn't that long ago that Delta gave us a warning and some of the others followed. Southwest jumped in with the free bags because they were trying to capitalize on one of the others that no longer was giving free bags, right? They thought that they could probably steal some folks, and then they sort of reneged. Where do we stand on this group?
Yeah, so the airlines are very volatile, Nicole. We actually saw some really decent performance last year, and we actually had early on this year some pretty strong guidance from the airline companies in general. But you can see that the consumer demand has definitely shifted, and the problem that we also saw was the increase in capacity, which was actually a warning sign going into the third quarter and fourth quarter of last year. So as you have increased capacity but not a lot of demand, obviously that's going to squeeze your revenue per seat mile, and that's really what the issue is right now. And to pull back capacity, you can't do that overnight. Sometimes it takes 8 months, even a year, to get that set the right way, dealing with these airports and things of that nature. So that's what you are seeing right now. Overcapacity, they're going to bring that in. They're going to leverage some of that pricing power to try to restore some of their margins here until demand really starts to pick up domestically. International travel is still relatively strong outside of maybe Canada and Mexico coming here to the United States. But domestic travel has weakened a bit.
All right, Kevin Green, great to see you always. Thank you so much. You brought us so much information this morning. Kevin, thank you.